When you're buying a home in California, one of the first big questions you're going to ask is, how much of a down payment do I need? And the answer? It depends. On a lot of things, actually. But that's not a bad thing. It just means you have options. Let's figure out which one makes the most sense for you. There's no one-size-fits-all number, because different buyers, different loans, and different situations can all change what you actually need to bring to the table. Let's break it down. A lot of people still think they need to put 20% down to buy a home. And while that can help you avoid mortgage insurance and maybe get a better interest rate, it's not a requirement. In fact, most buyers in California put down a lot less, usually somewhere between 5 and 10%, and in some cases, even lower. If you're using a conventional loan, some lenders will go as low as 3% down for first-time buyers with good credit. Fannie Mae has a program called Home Ready, which allows qualified buyers to put down as little as 3%. But here's the catch. You typically need a credit score of 680 or higher to qualify. The trade-off? You get access to reduced mortgage insurance and more flexible income guidelines. Then you've got FHA loans. FHA is super common in California, especially for first-time buyers. Minimum down payment is 3.5% as long as your credit score is at least 580. If it's lower than that, say in the 5 to 579 range, you may need 10% down instead. But here's the good news. That down payment can come from a gift, a grant, or a down payment assistance program, like the ones offered through CalHFA. That's the California Housing Finance Agency. They have something called the My Home Assistance Program that can help cover up to 3.5% of the home's price, essentially giving you the money for your down payment. You do have to be a first-time buyer, which CalHFA defines as not owning a home in the past 3 years. But if you qualify, it's a great way to get in the game with less cash up front. That said, here's something important to keep in mind. If you're making a lower down payment, you might have less negotiating power in a competitive market. In a multiple offer situation, sellers often favor buyers who come up with more money down because it can signal stronger financing and fewer obstacles in escrow. It doesn't mean you can't win with 3 or 5% down, but it's something to be realistic about, especially here in California. Now, if you're active duty military or a veteran, VA loans are another strong option. And the big perk here, no down payment, no mortgage insurance, and no maximum purchase price, and some of the most flexible terms out there. A jumbo loan is a loan over $806,500 or $1,209,000 in more expensive areas like all of Los Angeles. And borrowing these amounts or more will usually require the 10 to 20% down that you've heard of. And I have a lender that can do 10% down with up to $2 million loan amount. So, what's the right down payment? Honestly, it depends on your budget, your loan type, your credit, and your long-term plans. Some buyers want the lowest cash requirement. Others want to avoid monthly mortgage insurance. There's no one right answer, but there is a right strategy for you. And figuring all this out, your loan type, down payment strategy, and what you're comfortable spending is something you should do before you start house hunting. That way, you're looking at homes that fit your actual buying power, and you're ready to move quickly when the right home comes up. And if you're trying to figure that out, let's talk. We'll run through your options, find the smartest path to get you into the home without stretching you beyond your comfort zone.